all depends on where you are watching to find it. But here, Academy, welcome to two of our courses. Today, I will actually continue where we stopped in the first episode. Still on our beginners classes. Focus today is continuation of the last or the first episode. Please, we are taking another new episode, episode 2. That's great. The major market participants, major and minor market participants, the Forex market. We are talking about the major and minor market participants who actually are talking about the market makers, the people that know the price of the market. The market does not move on its own. Who are the ones that actually does move the prices of the market based on demand and supply for currencies, commodities, securities all over the world. So, based on the demand and supply of people, there is tends to be what a fluctuation in the market price. The price of the market can never be stagnant. Never. So, in as much there is an inflow of volumes of cash, definitely there is a fluctuation in the market price of the particular currency pairs. So now, what causes this decline and increase in the price movement is these entities, the major market participants. Just like what you are seeing on the slide, it says that the major market participants are those who make the prices move from the Forex markets. They are known as what Forex major participants. And examples are what commercial banks, central banks of all nations. We all know that commercial banks are financial institutions that render financial services such as what the accepting of deposit and the issuance of what loans their customers. By the central banks of every nation are the ones that regulate and stabilizes what their currencies. These are the major works. So these big banks or big boys participate in the Forex market. We also have the hedge funds. We have large corporates, companies like Amazon, name them Microsoft, Facebook. These are big, large corporations that affect the price of currency pairs. They are the ones that are responsible for what the fluctuations, up and down of the price, the decline and increase of price of the particular currency pair, commodities, markets, the major market participants are what are these people. An example of the banks that does these moves of change in price. For example, the commercial banks, we have commercial banks like HSBC, have City groups, names of a few. For the central ones, we have Bank of Japan, we have ECB, European Central Banks, we have Reserve Bank of Australia, Reserve Bank of New Zealand, and so on and so forth. These are all the big banks, the big boys that participate in the forex markets. And definitely their participation actually does what causes the currency or the dominant currency to fluctuate against its other currency pair that they are being compared to. This is the reason why you see fluctuations in price, and based on which traders we actually seize that opportunity to do what? To buy or sell and make profits based on these fluctuations caused by these participants. So we also have what? Hedge funds are also what among these major market participants. Hedge funds are satisfied financial body that collects funds from what accredited investors or institutional traders. They accept funds and what invest those funds in different assets via sophisticated strategies. We have the hedge funds, the speculators in the course of the fluctuation of the market prices. We have large corporations like Facebook, Amazon, when they are doing transactions in billions of dollars. This also affects the dominant currency pair that they've been paired up together. I believe I gave you instances of when big manufacturing companies that are into mobile phone want to buy their accessories from China. You see that they can't just carry their dollars to China to buy their accessories. They will have to convert to yuan, facilitate them to be able to go to buy the parts for their mobile phones. So by so doing, there's what a fluctuation between the two currency pairs. When they carry out these transactions, there's a tendency that dollar will decline, whereas the yuan will strengthen because more money is entering the yuan. That's just how it is. So that takes us to what the minor market participants. Minor market participants are those ones that doesn't have enough volume. People that does not have enough volume or that does not cannot move the market price. And example of those people that cannot move the market price are the retail traders. The retail traders, you and I, have these funds, cannot move the market. They don't have what it takes to move the market price. They're known as what? Little speculators in the market. So we are known as minor market participants. Minor market participants. Whereas the big boys are all the major market participants. You know that the forex market on the normal ground was not meant for the retail traders. It was meant for the big boys. The guys that found into the money with billions of dollars. It was meant for banks. Banks were majorly the people that participate in this market. But thank God for the coming of technology and the smart business guys like the brokers to be able to design platforms that will facilitate the retail traders to be able to trade the same liquidity as for the big boys through the help of what we call leverage. Everyone we proceed further in our classes, we actually will discuss this market terms and we get to understand what they are all about and how they work. So without wasting time in major market participants that believe have been able to do what clear you on what is major or who the major market participants and minor market participants are. It's forgiving my tongues are very loose. So I don't know what. Nice. All right, let's proceed to the next slide. Okay, we have the retail traders, just like what I said. Retail traders, they're individuals from every part of the world that trade the forex market in a small scale level in order to make profits. They are known as retail traders. So people just what I already explained that the retail traders are known as minor market participants. They don't have what it takes to move the market price. So that takes us toward the base and the both currencies. The currency pair is a notation and pricing structure of what currencies traded in the forex market. The value of a currency is currency rate and is determined. So let me take it again. A currency pair is the quotation and pricing structure of the currencies traded in the forex market. The value of a currency is a rate and is determined by its comparison to another currency. Great. So when we're talking about currency, we are talking about the comparison between what one currency over what the other. It's like comparing one nation against another nation, comparing the economy of one particular nation against the other nation. So the first listed currency of a currency pair is called what? The first listed currency of a currency pair is called the base currency, and the second currency is called the goods currency. So the quotation Euro USD, you can see Euro USD. The first currency you are seeing is known as what the base currency, while the second one by the right hand side is known as what the goods currency. So that the quotation Euro USD $1.25 means that 1 euro is exchanged for $1.25. That is, it means for you to have what? 1 euro, you require to have $1.25 to be able to have a euro. That is what it actually entails. For you to be able to have 1 euro, you need what? $1.25. For you to be able to buy 1 euro, you need $1.25 to be able to purchase the euro. So here, euro is the base currency, and USD is what the gold currency or counter currency. So that you call it what a gold currency or a counter currency. So I believe it's self-explanatory. Now, this is a diagram of a base and a gold currency. Based on what I just explained, you can see that the currency that is cycled in green color is known as what our base currency. While the currency that is cycled on an orange color is what the gold currency. And you consider equals to represent that for you to have or have the ability to buy 1 euro, you need what $1.40. $1.40 to be able to buy what a euro. Next slide. That takes us to what? Forex sections. Forex sections. I remember when I was telling you about the advantage of why you should trade the forex market. I feel that the forex market is the market that never sleeps. It is on 24 hours a day. It starts from what? On Sunday 11 p.m. and closes on Friday 11 p.m. So each month from Sunday to Friday, 24 hours. It's one of the biggest markets in the world that never sleeps, cutting across zones, time zones of different continents and nations of the world. So here we are going to dissect them to different sections in which this market work across. So for day traders, the most productive hours are between what the opening of the London markets at 8 GMT and the closing of the US market at 22 GMT. 22 GMT in Nigeria here is 10 p.m. The peak time for trading is when the US and the London markets overlap between 1 p.m. GMT and what 4 p.m. GMT. Yes, that's the peak. There's so much volume that is actually what's being injected in the market in this period. The London section, which starts around 8 a.m., and the US section that starts around 1 p.m., overlap each other. So there's so much injection and transactions going on within the period of 1 p.m. towards 4 p.m. So that's the best time to do or to trade the forex market. There's so much liquidity, there's so much activities going on in these two great countries. So there's so much transaction, so much businesses are what's going on. So this is one of the best times to do what to trade. So the main section of the day are what the London, US, and what the Asian markets. Below is a brief overview of the trading sections that will help you make the most of the markets. We have the London section, which opens between 8 a.m. GMT towards 5 p.m. GMT. We're talking about the active time, not that it closes around 5 p.m. The active time when this currency works. So the currencies that are very active in this period are the euro, the British pounds, and what the USD are what the most active currencies in the London section. Then we have what the US section or the New York section. It opens around 1 p.m. GMT and closes dies down around 10 p.m. I remember that I told you that the market is about a 24 hours market. But during 10 p.m., such currency as well, the dollar there's no much flow, there's no much transaction going on. So by 10 p.m. Nigerian time for GMT, the currency businesses have started winding down for the day. So there's no so much volatility or liquidity going on in the market. I don't know if you get me. So during this US section, which opens between 1 p.m. GMT to 10 p.m. GMT, dollar, euro, Great British pounds, AUD, JPY are the most active currencies in the market. They are the most active currencies in the market to trade during this section. Then we have the last section, which is what the Asian sections. The Asian section. These sections was between around 10 p.m. GMT on Sunday. Depending the country where you are. So it opens around 10 p.m. Nigerian time here in Nigeria, or 10 p.m. GMT, and goes into Europe trading section at about 9 a.m. GMT. Not very stable for day traders. Yes. The Asian section, there's not much movement going on. Asian section are made for what the Asian countries. We have the Australia, New Zealand, we have the Japanese yen, and we have the Chinese yuan. All these Asian markets, they open, that is their money, that's when their business opens. So, but there's not so much liquidity going on in this section compared to what the London and what the New York section. So mostly it's not actually suitable for all traders, majorly the day traders. But if you're a swing trader or a position trader, it doesn't really matter. Understand? It doesn't really matter. If you're a day trader, that's not the best time to go to trade the forex market because there is no much liquidity in the market. Every currencies are actually at their low state. They're very quiet. There's no movement at all. So this section will not be suitable for all traders. It can only go for the swing traders and the position traders. So these are all the sections we have in the forex market. Remember I said we have the London section, the New York section, or the US section, the Asian sections. So mastering these sections will actually help you to know the best time to do it, to enter into the markets to trade. You shouldn't be the kind of trader that trades anyhow and anytime. There should be a specific time that you do what you enter the markets to trade. When the volatility is high, when there is high liquidity, when there is high daily transactions going on, to what facilitation to do what to enter the market and make good profits. And that's that for the forex market sections. Let's head to the next slide. Introduction to what page and what trading platforms. So I'll be introducing you to the different platforms that facilitate you to do to carry out your analysis. The brokers are the smart business guys that actually will design softwares that facilitate you to have the same access as the big banks. So therefore, we'll be looking into these different platforms. So we have the MT5 and the MT4 traders platforms. We have the PC platform and the mobile platforms. All these platforms were designed and developed by Metal Codes Incorporated. They are the product of Metal Codes Incorporated. Then every brokers which you house your capital or your funds has their own way of customizing their platforms to actually carry their brands. So definitely you have to acquaint yourself with these platforms because it actually will facilitate you to be able to know when to buy and when to sell, how to place your stop loss, how to place your take profits, when to move your profits to break even. All these things are the things you need to acquaint yourself. So as a newbie or as a new forex trader, you are advised not to use your mobile phone to carry out your analysis. It's a mandatory thing to do to start learning how to trade from your PC. Because the whole chat and the whole platform facilitates your words to trade properly. I think that brings us to the end of the episode 2. There is no need of me actually trying to load you guys with so much of the topics. Try to digest, assimilate, write and take notes, and go through over and over these topics or subtopics I've been able to discuss from the episode 1 even to this episode 2. By so doing, when we start the practical aspects of the course, you will not be carried away. You will not feel like as if you are talking babadash. So please try to do watch the video again and again, watch the first episode, so watch the second episode. So thank you for actually staying tuned. Expect the third episode by next week. So definitely I will try to go to upload this one in no distant time so that you will have it and you will watch it and watch it over and over again. Please, I will appreciate you to do what to subscribe and click the notification button so that you know when I update the channels. By so doing, it will also help me to do what to produce more of these videos. Thank you so much. Thank you for your support. I appreciate those ones that have been subscribing of late and have been commenting and watching my videos wherever you are. I actually appreciate your support. Thank you so much.